Hi everyone, you've chosen an incredibly special day to join us because I'm here with Richard Kerby, the Vice President of Venrock. Thanks so much for being with me today, Richard.
Thanks for having me.
There's so many things I want to cover today, but I want to dive right into your investing. Before you got started at Venrock, you were a late-stage investor at IVP. What gets you more excited, the early stage or the late stage?
Yeah, definitely more early stage, and that's because the companies are so nascent and new. So oftentimes we'll be investing into companies that have 2 employees or 10 or 15, and at that point in time, there's not a lot there, and so there's a lot to grow, a lot of obstacles and hurdles to get over, and so a lot of learnings can happen when you go from let's say 0 to 100 employees. But once you're at a later stage, and let's say you're going from 100 employees to hopefully 1,000 if you continue to scale. Those are different kind of challenges, and those tend to be less exciting for me. So it's always exciting when I can get to a team really, really early, see their challenges, and help them get through them over time.
It seems like your favorite part of the job is working with the founders.
Yeah, I think working with founders that we've invested, as well as just meeting founders that we aren't investors in too. It's a lot of fun, and since at Venrock, I look at both consumer and enterprise investing, or companies, I should say. I get to look at a lot of different sectors and learn about a lot of different things on a daily and weekly basis. So it's good to get your hands on a lot of different things all at once.
I just read a great mini interview with Charlie O'Donnell and Hunter Walk, and Charlie asked Hunter a great question that I want to ask you. He said, if Zuck was raising $20 million at a $200 million valuation based on an idea drawn on a napkin, would you invest?
Yes. And whenever you come across just fantastic and founders who have proven that they can just go from an idea to a concept to early product market fit to scaling and to now the behemoth company that Facebook's been, you got someone special. And I think everyone's always looking for those A-plus founders and CEOs, and he definitely fits that bill. And I think there's always a big delta between an A-plus founder and even just an A-minus founder. And so when you come across those special folks, you want to do anything you can to get around those people and keep them in the fold.
Wow, so just a napkin? That's amazing.
Just a napkin.
So when you're investing in early stages and it's a young founder, how much harder is it when you've only done this once and you're pre-launch?
Yeah, I think people tend to talk about pattern matching when you're looking at investing, and you always want to look for people who have done it before, who have worked in the space before. But you can't be too blinded by that, because if you look at a lot of the big companies that we've had to date, Facebook included, Mark never had a job before that, never started a company before that. So you have to kind of put that aside when you're talking to someone who's a first-time founder, and just try and understand. Do you believe in that person's building ability to execute on what he's, or she has kind of written out? And, are you a believer in that vision? And so I often think, there's many reasons to kind of pass on a particular company. You can always say no, but I always try and think, why should you say yes? And if the founder, states out a particular vision, and if he were to achieve that vision, what does that look like? Does that look like an interesting world for you? And does that look like something that would create lots of value? And if you think so, then it means you should probably dig a little deeper and figure out, why you should be saying yes rather than why you should say no.
When you're having that conversation with yourself, you've just met with a founder. So let's say I'll be the next Zuck. So I thought of this cool idea, Facebook, and we just met, and now we're both parting ways, and you're thinking, should I invest or should I not? How do you get away from the what if? What if this fails? What if I totally embarrass the firm?
Yeah, I think you can't be afraid of taking risks, because that's the only way you can get great returns. So I'm sure at the time when Mark was looking to raise his first institutional round, there were a lot of people who said no to him and thought that it would never exist, or they thought MySpace already had that particular market, et cetera, et cetera. So you have to kind of think. Usually, I think there's 2 or 3 things that really matter when you're looking at a particular investment, and I think you should be careful not to kind of overcomplicate things. And so once you figure out what are the 2 or 3 kind of key questions you want to ask, and then you go back and figure out how to dig in and find the answers to those questions. So usually, it involves talking to lots of people who have been deep in the space, and people who have been living in that space much deeper than I have and much longer than I have, and understanding where are the challenges, where are the pitfalls, and kind of feeding that idea to people and seeing how they react to it based on their experience. And as you talk to more and more people about a particular space, you can get your own thesis and understanding about a particular opportunity. And then it's up to you to kind of get comfortable with the risk or not. And then you either pull the trigger or not.
Pull the trigger, that sounds so intense. Okay. All right, so let's actually get into like the day-to-day investing, and I thought it might be fun to do that with your recent investment in Lux. Let's start from the beginning. When and how did you learn about it?
Yeah, so I read about it actually initially. I want to say it's sometime in the fall, I don't know, October or something like that.
Mhm.
I think it had just came out of beta, so they launched the beta program, I believe, in August. So from August to kind of October, it's kind of like a closed beta. It really couldn't, add a. You couldn't get in the app store essentially. So they launched in October, November, I can't remember, and I heard good things about it. And I actually tried it myself too, and I had an awesome experience. And so um, heard about it that way, and then I try to remember how I think I knew an angel investor in the company. I think he introduced me to Curtis, the CEO, and that's how I first met with Curtis. And so it was actually we kind of actually got late to the game in that particular round because he had met with a couple investors. I had met him on I think it was a Friday or something like that, and I was super excited leaving the office, and I wanted to make sure I could follow up as quickly as possible. So I brought him in that following Wednesday, I believe, to meet another one of my team members, Brian Asher, and the two of us, started talking to Curtis as well as Greg and Craig, the other kind of co-founders of the team there. And we started digging in, and as we talked more and more, we liked more and more what we were hearing. We also gave the team kind of some product feedback based on our experience with the application and the kind of user experience and service. And so, it was one of those experiences when each successful meeting with an entrepreneur, you like them more and more and more, and you start to kind of feel more and more comfortable around it. So that was a Wednesday, and then I think uh, that next Friday we went into their office, spent 2 hours with the team, digging into more and more of our questions, and then had invited them back in on Monday to meet the rest of our entire team. And our entire team also was super jazzed about it, and we decided to kind of put in a term sheet and try and consummate and close the deal. Unfortunately, we were able to win the deal amongst a number of firms who were interested in having that Series A.
Wow, so does it all happen that fast?
Not all the time. I would say ideally it doesn't happen that fast. I mean, you want to spend more and more time, getting to know people. But once you spend time with Curtis and the team there, you realize that they're a special group. So it's easy to get excited by what they're doing and knowing that they're super capable of executing on their particular vision. So that was like a really super accelerated 10-day process. But
Wow.
usually, you've met with someone in the past, you maybe have tracked them a little bit, and it's more like a 2 to 3 week process of like actual full-on digging into a particular investment, and that's, I think, tends to be the more norm of the issue. But when things are really fast and it's exciting and you want to get ahead of it and you don't want to miss it, you have to move fast sometimes.
So is it typically founders coming to you, or are you guys also going out and seeking different companies?
Usually, I think as investors, you tend to get more excited about the companies that you either find on your own or are referred to by someone you really trust. So, as investors, we get lots of, kind of cold emails on a daily basis from, people that we've never heard of in parts of the world we've never heard of too, in fact. But, you want to find things that interest you. So I try and read all the emails I get, but I don't necessarily respond to every single one of them because it's a lot and can be somewhat time consuming. But, everyone's got kind of like their own kind of passion areas in general. So if you can strike a chord with that particular person based on what that is, you then decide to kind of want to dig in more. But yeah, I find the things I find on my own or get referred to people that I respect tend to be the things I get most excited about.
When you're having that first conversation, let's say it's a younger founder and they're a little bit nervous pitching you.
Yeah.
What's your advice?
Um, Yeah, I mean, it's tough to kind of give kind of cadence to someone who's nervous. I think that's definitely a signal, and maybe their level of maturity and ability to kind of command a room, or just maybe hire someone too. So when you can see that there's not necessarily maybe not nervous, but maybe there's an awkward kind of feeling in the room. You try and find a pinpoint to kind of make that person just feel comfortable. So whether it's a joke or you latch on to something they say and you remember hearing that in a different kind of pitch, or maybe you've been thinking about that same idea, that same space for a while. So you were trying to find a way to kind of connect with the founder. And so there's hopefully no tension or awkwardness or nervousness at that point in time, but it's usually easy to get by. I actually rarely come across folks who are nervous. It's much more around, you're meeting someone for the first time, they don't really know who you are, or vice versa, and all they can kind of gather is what they read online about you. And so you always want to try and find a way to make someone feel comfortable, regardless of the kind of environment you're in.
One great lesson I learned from David Tish over at Box Group is that founders, regardless of what stage you're at, should never approach an investor as if they're making a transaction. You've got to approach them like you're making a relationship.
Yeah, I think that's sound advice. I think when things tend to be transactional, they have less emotion tied to them and less impact that can go either way in that kind of relationship. So when things tend to be transactional, especially in the early stage investing world, it tends to mean that the founder doesn't necessarily care about who he gets as an investor. He just cares about does he get the money, amount of money he wants. And so when someone's just looking for money, that's that doesn't allow for differentiation in terms of how someone can be helpful. So if you are really looking for the best partner, you're less likely to have a kind of transactional experience, and you'll be more open about the things that you're working on, the things that you're thinking about, the challenges that you're going to face, and how we can be helpful to kind of overcome those challenges.
One of the things that got me most excited when I was doing my research on some of the work you've done is, like I said before, you really seem like you're passionate to work with the founders. That's what gets you excited. It seems like today VCs also have to pitch themselves because there's a lot of money in the game, so founders have options of where to go. If you were pitching yourself as a VC, why should I choose to work with you guys at Venrock?
Yeah, I think as there more and more funds, there's more and more capital to be had there for founders. It becomes a more increasingly competitive environment for venture capitalists. So I think everyone has their kind of unique spin, and some of it tends to sound the same at some point too. So that's why a lot of I think that sales process is just picking as an entrepreneur, picking someone that you're comfortable with, that you understand, that you think could be a great partner for you from like a I get along with this person standpoint. I think that's an underrated part of it, and that's something that's not differentiated, but it is at the same time because everyone has a unique personality, a unique way of thinking things, and new things that kind of give them excitement about. But on the more tangible standpoint, I look at kind of like two things, and one on I guess both the consumer and enterprise side is I try to be as maniacal as possible about trying to help our founders get the highest bang for their buck in terms of hiring talent. So I go through tons of LinkedIn, my network, and all these different things to kind of make sure that I can gather the best talent for my particular entrepreneur. And I know there's other firms, not including Venrock, that have teams assigned to that internally. And I personally like doing it on my own because I think there's an advantage to having the investor who's spending a good amount of time with the company doing it, because they probably have a better understanding of what the culture fit is at that company and knows what that person should look like. Two, they tend to be as an investor better at interviewing for a number of roles, whereas maybe an in-house recruiter who's maybe generically looking at across many different fields is looking at more of that kind of first high-level interview as opposed to being able to dig into certain skill sets that are required to succeed in that job. And then three, I think when it's time to close a really exciting candidate everyone wants to get on board, you're not going to have an in-house recruiter close that person. It's going to be the investor who's on the board or someone who's really spending time with an entrepreneur and their team on a daily basis. And then secondly, this is more kind of focused on my enterprise investing. I really like getting our I guess portfolio companies customers. So I'm like their part-time SDR, or if you know what that means, like a sales development representative. So I will understand, okay, if you're selling marketing software, you probably want to sell to the CMO, VP of marketing, whatever it might be. And so whether it's in my network or not, I'll get you directly to that CMO, VP of marketing, so I can help make that sales process much more efficient than it would be otherwise.
I love the way you say that because it makes me feel like you're really becoming a part of the team and not just a figurehead. Yeah,
and I think an important part of that too is just obviously you spend lots of time with the CEO as an investor, but you want to make sure to get to know everyone that you can on the team. So the CEO has challenges and issues, but so does every other person on the team. So whether it's someone who's running products, someone who's doing sales, someone who's doing BD, someone who's in engineering, someone who's doing customer service, all those different roles have very different challenges. And if you make yourself available to each employee at the company and make them feel comfortable requesting help from you, you can be more impactful as an investor.
When it goes to hiring specifically and you're helping teams, when do you suggest is the right time to hire? Because I've been reading a lot lately that you should be as scrappy as possible for as long as possible.
Yeah, I think it varies, by company. It can be, you could always be hiring, and you could also not be hiring for a long time, depending on what your resources are. I mean, capital can be a real constraint, especially if you're a consumer business that may not be, generating revenue yet. So you're kind of hamstrung by how much capital you have. But I think in general, you should always be not looking, but open to hiring great people. And so that's the kind of, there's always like people will look at barriers to entry and talk about, IP and patents. And to me, the greatest IP within a company is the institutional knowledge of that team itself. So whenever you can find great people, you want to bring them on. But obviously, in the case of Lux or anyone who's raised, a Series A or Series B and has capital, you do that with a hiring plan. So, and within the tech space, it usually means a lot of engineers, a lot of people within product. And so you kind of focus on what you need to kind of get from point A to B to C. And, teams tend to look out, 18 months or 2 years when they look to raise a good amount of capital. And you realize, okay, in these 18 months and 2 years, I want to accomplish X, Y, and Z. What do I need to accomplish X, Y, and Z? And you go out and you make those hires.
When it comes to the scaling part of things, I really want to ask you about, we can use Lux as an example, actually. So right now, they're a young company and they're constantly expanding to new markets. And as we shared before, I have it here. So it's 90% month over month of company signups and 97% in customer growth. So those are huge numbers.
Mm-hmm.
Let's fast forward 5 or 6 years. Now they're in every city in the U.S. How do you maintain that type of growth? Because you're no longer, expanding to a new city or bringing on new like what happens then?
Yeah, I mean, the answer is you don't, obviously. I think, as you scale and become a larger and larger company, you get to, you further and further saturate your particular market opportunity. So at that point, the growth rates, go down, but your market saturation goes up. And so hopefully you've got more and more market dominance in your particular segment, albeit though it's slower growth. And hopefully, with those economies of scale, you probably have had, increasing in margins, more pricing power, and all these things that make you a much stronger business beyond just being a early stage growth company.
Okay, so then what would happen then is once you're saturated in the market, you'd be continually improving the product, right?
Well, yeah, you're always looking to improve the product, but more so, you're also looking. Okay, we got to massive scale by doing X, but we should always be thinking about what's after X and what's the next thing. It's important to always focus on one particular thing, but don't be short-sighted and think that that's the only way to win in a particular space. And so you want to know what's inning number 2, 3, 4, 5, 6 look like for your company over time, because at some point, if you do very well, you're going to own that particular market, and you don't want to be stagnated by the fact that you've cleared out your entire market and have nowhere else to go.
Yeah, that sounds horrible. I don't think that's going to happen, though. You've shared before, Richard, that you're really intrigued by edtech, cybersecurity, the on-demand economy, and data-driven apps. Out of those 4, talk about one of them with me and just tell me what gets you most excited about it.
Yeah, I think, I guess let's go with data-driven applications. So, I think when we looked at SaaS in general, I think we're kind of in the second wave of SaaS companies. I think the first wave of SaaS companies were things like Salesforce, which have built monstrous businesses, obviously selling to other companies. But I look at those opportunities and those products more as kind of just workflow enhancement. And I think, the second wave of SaaS companies are going to be more data-driven in how they offer a product, but not necessarily sell via data. So, you'll be a company that sells, marketing automation, but what's really the power behind the tool is the data you're using to power the automation. And so within data-driven applications, we're seeing more and more companies use analytics to be more predictive about how to do things. And so you're making, whether it's, a sales representative or a marketer much more efficient by providing them tools that are powered by data. And I think so the next, multi-billion-dollar wave of SaaS companies are going to be driven by their data-driven applications. And I think that's going to be, lead to companies that are as large as Salesforce. And hopefully there'll be multiple of them.
Have you seen any recently you're excited about?
Yeah, one of the companies that, I've invested here at Venrock is a company called 6 Sense. And they do kind of predictive intelligence and analytics for sales. So it's via demand generation for them. And so they've got, competitors in the space that look to find similar customers and make those as like net new customers and lead gen for an existing business. So let's say, for example, I'm Cisco and I'm selling routers. I would use 6 Sense to find me net new customers. And what 6 Sense does, they mine lots of different data points, but they also monitor kind of behavioral intent. So they can tell that, Richard works at Walmart and he's, an IT admin and he's the buyer of routers for Walmart. And based on his activity that we see on his web activity via, the Cisco site and all these things he's doing, we gather that he's probably in intent to buy this quarter of routers. And based on the things he's doing, he's probably going to buy in the, I don't know, $1 to $10 million camp scale wise. So, having, that data being provided to the demand generation team of a particular enterprise, and then they can use that to send off to their sales team, gives them a really efficient way to kind of approach the sales pipeline as opposed to kind of going based on, kind of offhand thoughts on who may be purchasing something.
Very cool. So I want to shift gears for a couple seconds and chat about a great piece that we were talking about before that you wrote in TechCrunch titled, "Why Are There So Few Black Investors?" The piece got tremendous traction and it was well-deserved. You did a really great job. Can we start out with you just briefing us a little bit on that article and what you found in your study?
Yeah, so I've been in venture now for I guess 4.5 years, and there's never been a large amount of black investors in the space. So I figured, people always talk about the lack of diversity as being an issue just because you can see anecdotally. But I thought, it'd be great to just kind of figure out what those numbers actually are, do the research, and put it out there so that people could have something to point to that's tangible and say, okay, look, we're talking about this, but look, here's how bad it actually is. And that can be a good starting point for a continued discussion.
Yeah, the numbers were pretty bad. And one of the things that I really admired that you did is you said that because there's one female African-American investor just based on the study, and you called her the real unicorn. And I love that you did that. One of the reasons I feel like this isn't discussed so much is because people outside of the technology sector don't really know that it's happening. Like when I was in college and taking communications courses, we never talked about this stuff. And then I think once you get here, sometimes people don't know how to talk about it because they don't know how to solve the problem. You have a couple of great solutions for this. Can you share those?
Yeah, I think, there's no one-stop-shop solution for how to solve this. I think, there are a lot of things that need to be hit on all different fronts. But, I think, one thing I guess, group that I'm working with is a group called Code 2040, which I mentioned in the article. And what Code 2040 does is takes, minority undergraduate students who are majoring in computer science or engineering or some sort of STEM field, and gives them and places them with an intern with a particular tech company. So whether it's like a Facebook or Twitter or Jawbone or Google, who are partners of the program, it gives people who otherwise wouldn't have the opportunity or would have a much harder challenge of trying to get an internship with these particular companies the opportunity to do so. And so they get to spend 10 weeks out here in the Bay Area working at pretty awesome companies, learning tons, and then as anyone who's had an internship in the past, that can lead to a great opportunity for you to come on as a full-time employee. And so that's a great way to get just more people on the engineering front into the pipeline. Another group that I mentioned too is one that Charles Hudson and I had started called Stealth Mode. And that's basically a community of black people in technology who are doing various different things, whether they're investors, entrepreneurs, product managers, and just tries to bring a community in which we can all find ways to help each other. And so what we kind of do is put together a number of kind of quarterly events, whether they be just kind of networking happy hour type things, whether they're volunteering activities. We want to make sure that we can touch into people's kind of passions, whether their work, they want to volunteer and give back philanthropy, or they want to have fun too. So I know like last year we rented up some Google buses and took the folks in Stealth Mode up to Brown Estates, which is a black-owned winery in Napa. And so that was a great experience. People love that. So finding different ways to get people to come together, engaged, and once you build a community around a certain passion point, it tends to kind of self-sustain itself, and people start to find value in it of itself. So we've had people, find co-founders, employees, and just various kind of ways in which they can help each other once you put people in front of each other.
That's great. For Stealth Mode in particular, where can people find more about that? I was searching and I couldn't really find much.
Yeah, there really isn't much. I mean, so Charles and I kind of started it kind of haphazardly like 4.5 years ago, and so.
Oh, that's cool.
Yeah, it's cool, but there's no website, so that's why you didn't find anything. And we kind of operate on, I guess, 4 vectors right now, and it's one, a Google group that we use as an email listserv to kind of manage that. 2, we have a Slack group as well that can allow for just kind of quick action discussion about certain things. 3, we have a LinkedIn group, and that's what I use to help with also hiring. So oftentimes, since not only am I one of the few black investors in technology, I'm also one of the few black people in technology, period. So when people want to find diversity in their hiring, they oftentimes will get emails or calls or texts. And so I use the LinkedIn group to just understand the various roles and experience people have within the Subway community, so I can provide them as first and second and third people to offer as potential hires for those particular opportunities that come my way. And then lastly, what do we have? A Facebook group too. And that's just to get a more social feel to the group as well, so people can see a face to a name and understand who's in the group. When you see someone random emailing the thread, you can figure out who they are and where they're from and how you can be affiliated with them.
Oh, great. I'm glad we said that because I wanted people to be able to learn a little bit more about it. What would your message be, Richard, to teenagers, so freshmen or sophomores in high schools or just kids who are graduating school, to get involved in tech and to embrace this? Because once you get into it, I never thought I would be interviewing tech founders and VCs, but it is my dream job to the highest level. Mm-hmm. What advice do you have so they can have that same dream job feeling?
Yeah, I think the best way is to just try and immerse yourself in as many ways as possible. So one, you have to be passionate about it. So if you're not going to be passionate about it, I mean, there are definitely many career paths, and technology is not for everybody. So one, it's trying to figure out what your passion is. But if you do decide that it is technology, use as many products as you can. Start to figure out why does Twitter work and why does Facebook work and why did MySpace not work, and understand why why people built a product a certain way. And why is it so easy to use Snapchat where it is difficult to use other services that may be similar to it? So understanding why products are built a certain way, why they work and what function they provide, what value they provide to consumers or even businesses are things to think about when you're trying a product and looking at a product. Thinking about why a particular product is designed a certain way can get you just into the mindset of thinking of why things are built and why they're built in a certain pattern. And then I think as it pertains to just maybe on the investing side is, think through how, let's say you follow the press on TechCrunch, whatever it might be, and you see a company gets funded, you think, okay, so they're raising money. What is that money going to go for? What do they need to do to accomplish their, particular goals or milestones? And, where do you think that company will go to at some point? How will they get there? And so just trying to have that mindset and just come up with your own thesis is important. And then I think, if you're teenagers or even people who are younger, I think, being able to get immersed into some sort of, STEM environment, whether it's engineering, computer science, and any kind of course you can take to get yourself familiarized with it would be great in your school. Also, there fortunately is a lot of free material online to get up to speed on it. And some of it, I think, is obviously a little too challenging for someone who may be, 13 or 14 years old. But there is more and more stuff that's geared towards that age group. So, and fortunately, a lot of it's free, so you can find that online. But I know, for myself included, when I was in high school in New York, there weren't really opportunities to take a computer science class. So unfortunately, the environment for some folks don't allow or facilitate that opportunity. And so you have to try, unfortunately, a little harder to find opportunities for you to kind of really gain that knowledge.
When it comes to the education sector, I know you're also interested in ed tech. Do you think that we're at a place now where we really have to have everyone learning computer science?
Yeah, I think anyone can be benefited by learning it. I don't think it should be mandatory by any means for anybody because, once again, everyone's got different passions and interests. So I think, but it should be seen as an easier option than it is today. So, for instance, making requirements that maybe it's a language and art or whatever it might be, whenever there's requirements that are beyond, I guess, just math, science, and English, which we all have, there are also other requirements to graduate, whether it's high school or college, and making computer science a filler for one of those requirements allows someone to be more interested. If it's going to be an opportunity, when I was, in 10th grade, whatever it is, the last thing I thought about was thinking about which extra class should I take for fun. It was I'm going home when I can go home as early as possible. So if you force it to be an elective that needs to be at a 5 p.m. on Thursdays only, whatever it might be, you're putting yourself at a much larger disadvantage to get people to be interested in that particular opportunity. So making it easier for students to be able to take these courses, I think, will increase enrollment and then increase people's passion in that particular opportunity, whether it's computer science or whether it's some sort of engineering or physics. So there's a lot of interesting things that people don't have access to today that they should.
Yeah, and I think a lot of times when you don't have access to it, you don't know how much you might love it.
Yeah. I mean, there's always times when I may dismiss something, and then it's similar investing. I might hear about a particular company, and often I'm like, sounds not a great idea. I think it's not a good fit for us, and I might dismiss it, and then I may end up meeting the founder 2 weeks later, and I'm like, wow, I never thought of it this way. So the way you kind of put pitch the vision of the company, that's way more interesting than I thought it would be. That's why you always want to try, if possible, take a meeting with someone because you never know where they plan on taking their particular opportunity.
I love that you said that because it transitions to something that I read that you said that really resonated with me. You said that when it comes to venture capital, it's an ongoing learning process. So every time you work with a company, you learn a little bit more. And it reminded me of something that my dad said recently, that it doesn't matter how many hits you have, it matters how many times you step up to the plate. How have you seen that manifest over your career?
Yeah, I mean, I think most people consider venture capital to be like an apprenticeship, and I think you're always learning, especially because technology changes so fast, which means it may make some things a lot easier, but it also creates new challenges. So even though you may be able to kind of guide your founders with particular advice on how to avoid particular obstacles, those obstacles may be obsolete. Scaling a company isn't as hard as it used to be necessarily back in the day. So now there are newer challenges to kind of focus on, newer costs to a business that were unforeseen beforehand. And so I think just always be open and ready to find answers to new challenges are always going to be a problem, with regardless of investing today, tomorrow, or 10 years from now. And I think it's a good thing because more challenges bring usually more opportunity. If you can get over those hurdles, you can probably create lots of valuable things.
When you say the openness, it reminds me of a great piece of advice I read from Heidi Roizen about leaving space for good and random things to happen to you. When I first started working, I thought that regiment was the only way to do anything, and I
Hmm.
learned that every day was suddenly the same and I was seeing no progress. How do you make sure that you don't fall into that trap?
Yeah, I think some of it is kind of personality based too. I think so. For me, I'm someone who's doesn't work in structure at all. Like I don't like
Oh, God.
process. I don't like structure, and so I kind of run in my own autonomous way that I'm sure people who are very process driven would hate working with me. And that's just how it just works for me. And so I think personality wise, it leaves me the ability to kind of be more flexible because that's just how I am naturally. But I think uh, in general, if you're just open to hearing about things, you're more likely to be more flexible about certain things. And I guess going further, I think when I think about trying to find companies or just trying to be successful in career or whatever it might be, I look at it as trying to create as many opportunities as possible to get lucky. Because no matter if luck works or not, I'll get lucky if it does, and so will Curtis, and so will any particular founder who has an awesome business. There are certain inflection points where luck is involved, and so I just try and create as many opportunities as possible to get lucky, and that's how I kind of think through it.
What's an example of an investment that initially you were like, oh, I don't know, that ended up being hugely successful for you? Or any opportunity, doesn't have to be an investment.
Yeah, I think the easiest kind of way to think about it for people is a job opportunity. So you're probably in a current job right now, and you may have offers to join something else, or you're looking at other opportunities, and you're really not sure if it's the right thing for you. And so you want to just oftentimes you need to just take a chance and a leap of faith on I think if this goes well, this could be an awesome experience for me. Like back when I said earlier, to the point where if you can fast forward and say, if opportunity A works as planned, does that seem exciting? And so if you look at particular roles for yourself or anyone else, you try and fast forward and think, okay, if all goes well, I get this role and I do succeed, what do I look like then? And if that looks like a better picture than where you might be in your current path and your current environment, then you might want to jump to that opportunity. Similarly, if you're looking at a particular company that you think has the opportunity to create awesome value to consumers or businesses and become hugely impactful to society, it might be worth taking that leap of faith.
When it comes to taking a leap of faith and looking ahead at that picture to see if it's what you want, let's say we're sitting here, it's 5 years from now. What kind of conversations do we want to be having?
Yeah, hopefully, Lux is a multi-billion-dollar company amongst other companies that I'll invest in already or will have invested in between now and the next 5 years. And hopefully, you and I are both very successful. And I bet, hopefully, I want to see, new technologies that become, mainstream at that point in time and become, vital to how we operate as individuals and people in the world. So it'd be cool to see that. And it'd be cool then having that discussion. Okay, now that we have these new technological protocols or just technological advancements in place, what can we do to leverage those particular technologies to create new applications, new products, new businesses, new markets. And that'd be a very interesting discussion 5 years from now.
And we can also hope that we're celebrating that with both of our teams being good.
Exactly.
We can watch a conference game maybe together.
Exactly.
Yell on the other sides. Awesome. Well, Richard, thank you so much for spending time with us today. Can we close with you sharing how people can stay up to date with you and everything you guys are doing at Venrock?
Yeah, so my email address is just Kerby at Venrock, Kerby, or just Richard at Venrock. Either one works. And I'm on Twitter at Kerby, so at Kerby, and that's probably good enough. Yeah.
Awesome. Thank you so much.
Yeah. Take care.